Hello, everyone. I'm Ravi Jindal, your local real estate expert and advisor here in San Diego. Today, we'll be talking about early 2026 housing momentum and what buyers and sellers should do next. Before we dive in, I want to introduce my co-host, Dylan Hoffman. Dylan works very closely with buyers and sellers across North County, coastal San Diego, and have a very strong hold and pulse on what the data is showing and how it actually plays out on the ground. All yours, Dylan.
Thanks, Ravi. Honored to be here. All right, let's set the stage. We're coming out of a few really choppy years in housing, and early 2026 data is starting to line up in a way we haven't seen in a while.
Yeah, and what's interesting is, Dylan, it's just not one stat. We are seeing demand, inventory, and pricing all moving in a healthier direction at the same time, especially here in North County, San Diego.
Exactly, and it doesn't just feel like hype, right? It feels like normalization, and that's a really big deal for buyers and sellers trying to make smart decisions this year. So let's start with the macro backdrops because everything flows from rates. Mortgage rates are sitting close to their lowest levels we've seen in nearly 3 years. That
Mm-hmm.
didn't happen by accident, right? It's being driven by three
That's
main
true.
factors.
Yeah.
First, the labor market is cooling. We're seeing job growth slow and the unemployment rate gradually rise. Not a crash, just less heat. Second, inflation has come way down from its peak. We're hovering in the mid to high 2% range, still sticky in some spots, especially with tariffs keeping pressure on prices, but dramatically better than where we were. Third, and this one matters a lot for housing, what we call the mortgage spreads have improved. Lenders are no longer pricing in extreme risk, and spreads are getting closer to their historical norms. That's helped keep mortgage rates lower, even with some bond market volatility and treasury yields lingering a bit higher.
You're right, Dylan, and buyers are feeling that. Psychologically, high fives, low sixes feels very different than sevens. We are seeing more showings, more conversations, and more serious intent. Nationally, the data is showing that demand is building week after week. Pending sales are rising, purchase applications are up to double digits year over year, which usually leads to more closed transactions between 30 to 90 days, which is less days on market.
Yeah, and what I like about the data is it's not just a holiday bounce, right? It's been consistent through January.
Yeah, and locally here in North County, San Diego, that shows up as more activity, but not chaos. Buyers have more options than they did last few years. Inventory has finally started growing, but it's still a seller favorable market.
Right, and we're not talking about a flood of listings here. We're talking about a market that can actually function. Prices are holding steady. We're not seeing broad-based price cuts, which tells us this isn't a weakening market, it's a more balanced one. Now, for buyers, this is a window that rewards preparation, Ravi. You've
Yeah.
got more inventory, slightly better rates, and sellers who are willing to more negotiate a little bit more on terms. But competition's coming back, especially for well-priced homes. This is not the moment to wait for a crash that the data simply does not support.
Well said, Talan. I totally agree. We are entering into a spring market and then eventually into the summer market, which historically is the hot period for San Diego. The buyers who are winning right now are decisive, well informed, and realistic. They're focused on value, location, long term fit, not timing the perfect rate. For sellers, the message is very clear. The market will reward realism. Homes which are priced correctly and presented well are moving. Homes that are testing aspirational pricing are sitting longer and getting exposed.
Yeah, and that's actually healthy, right? Builds confidence on both sides of the transaction. Sellers still have leverage, but strategy matters more than it did when inventory was painfully tight. Now, the big takeaway is this, Ravi. Early 2026 is shaping up to be the most constructive housing setup we've seen in years. Demand is returning, inventory is healthier, pricing is stable, rates are near multi-year lows because the economy is cooling in a controlled way.
Yeah, and if mortgage rates stays near current levels, or even we see a further reduction in any of those rates, this momentum has a really, really big chance to carry straight into the spring market and eventually into the summer timings in North County, San Diego here.
Yeah. And if you're buying or selling, the winners in this market are going to be the ones with a plan, not a prediction.
Well said, Dylan. To wrap this up, the 2026 housing market, especially here in San Diego, is offering something which we have not seen in quite some time: balance and opportunity. Whether you are thinking about buying your first home, moving up, or selling and taking the next step, the key is to act strategically with clarity, good data, and the right people around you. We'll continue to monitor the trends, rates, and local momentum closely as we move through the spring, because this could be one of the most constructive markets of the decade if stability continues to hold. Thank you so much, everybody, for tuning in. If you have questions about your specific situation, buying, selling, investing, or timing, don't hesitate to reach out. Again, I'm Ravi Jindal, your local realtor, along with my co-host, Dylan Hoffman. We'll see you next time as we track how this 2026 market continues to hold up. Thanks and have a blessed day.
Thank you.